Hey folks, Queen here. Hopefully this wind out here won't disturb our video too much. But in this video I'm going to educate you on how the banks fuck us. And we're going to talk about looking at a bank's financial statements and whatnot from Investopedia. And yeah, we'll just dive in. Alright, so don't fret. At the end I will share with you a solution, a remedy for you. You know, a lot of the remedies have changed since the old HJR 192. So you have to seek your remedies in other ways. And there are plenty of strategies and ways to do that. And I'll share with you at the end the strategy. All right, so I'm on Investopedia. And this here's the link up here. Where's my cursor? Oh, there's the link. Analyzing a bank's financial statement. All right. So now the reported financial statements for banks are somewhat different from most companies that investors analyze. For example, there are no accounts receivables or inventory to gauge whether sales are rising or falling. On top of that, there are several unique characteristics of bank financial statements that include how the balance sheet and income statement are laid out. However, once investors have a solid understanding of how banks earn revenue and how to analyze what's driving that revenue, bank financial statements are relatively easy to grasp. Now, this is the part that is going to really stick it to you. How do banks make money? Banks take in deposits from consumers and businesses and pay interest on some of those accounts. As we all know, you're not getting 1% nowhere. Nowhere in the world are you getting a 1% return on an interest-bearing account, even a CD, right? So we're talking less than 1%. Continuing. In turn, banks take the deposits and either invest those funds in securities or lend to companies and to consumers. Since banks receive interest on their loans, their profits are derived from the spread between the rate that they pay for the deposits and the rate they earn or receive from borrowers. Banks also earn interest income from investing their cash in short-term securities like U.S. Treasuries. However, banks also earn revenue from fee income that they charge for their products and services that include wealth management advice, checking account fees, overdraft fees, ATM fees, interest and fees on credit cards. All right, let me read this again because I know some of you didn't catch this. All right. How do banks make money? Banks take in deposits from consumers and businesses. So they get money from consumers and businesses. And then they pay interest on some of those accounts, which we know is bullshit. It's less than 1%. In turn, then the banks take the deposits that they've taken in and they either invest your money in securities and make money off of your money, or they lend your money to other companies and to other consumers at higher interest than they're paying. And then what they do is they keep the spread, right? I did another video on this. Look on the channel somewhere. I think I talked about capital arbitrage or something like that. So basically, when you go in, you deposit your check, you got your CD, you got your money market account or whatever it is, you're not getting over 1%. All right. So they're taking that money, taking your money. And then I walk in the bank, they're loaning it to me at 20%. So they're giving you, let's just call it 1%. So 20 minus 1, 19%. Who's keeping that 19%? The bank. That's how they fuck us. All right? And they can legally do it. Why? Because they have a banking license and a banking charter. I'm going to share with you how not to get a banking license or a banking charter, but to basically be able to have the same arbitrage opportunities that the banks have. All right, so now let's go here. I don't want to stay on this too long. I really want to dig into the statement. All right, now let me give you this reference here. This website, Bauer Financial. There's the link, Bauer Financial. You can go here and you can verify everything. All the information that I give you is not coming from Queen. It's not my opinion. It's not what I think. It's factual information that I've researched, right? So you can always follow up, and I encourage you to always follow up and do your own due diligence and research what I'm sharing with you so that you can come to thine own understanding. All right. So anyways, I'm giving you this link here because this will give you the data to let you know that banks, their annual revenues are anywhere from 500% up to, can be thousands to 2,000%. And remember what I just read to you in the article from Investopedia that says banks have no skin in the game. They make their spread off of others' deposits. They have no skin in the game. Yeah, and it's legal. Anyways, let's look at Bank of America Corporation. All right, so the table below ties together information from Bank of America's balance sheet and income statement to display the yield generated from earning assets and interest paid to customers on interest-bearing deposits. Sorry for the wind. I'm outside sitting at the beach enjoying the day, and I decided to do a video. Alright, so most banks provide this type of table in their annual 10K statement. 10K statements is something that you really want to get used to. Again, if you really want to educate yourself on money and understand how banks work, and then how you can play that same game as well, like becoming your own banker and using these same type of strategies, especially right now. Right now, the time that we're in the year of the pandemic. Money is at an all-time low. Interest rates are at an all-time low, meaning you can raise capital, you can borrow capital, you can build business credit at low, next to 0% interest rates, meaning you can borrow capital just like banks do, right? They're borrowing our capital and they're leveraging our capital and they're making more money. You can do the exact same thing, right? But remember, the remedies that used to be are not present today, so you have to be creative in creating your own remedies, and they are here, they are available. You just have to use the strategies that make sense to you, that resonate with you, right? And then follow through, take action. But yeah, so I mean, just as simple as building business credit, which is one of the things that we do for our clients, build them up a business credit profile. How many businesses can you have in the United States? As many as you choose to, right? So you can build 10 businesses up to 100,000 or so in business credit. Boom, you've got $1 million right there, right? You can take $1 million and you can put that in a bank debenture. You can put that in PPOs or different type of private placements. You can earn you anywhere 10, 20% on a monthly basis, right? So now you're paying back those lines of credit, whatever it is, call it 0%, 1%, whatever they're charging, 12%, it doesn't matter, right? It doesn't matter, because even at 12%, if you're making, 20, that's an 8% spread. You're doing the same thing that the bank is doing, and I'm talking 12% annualized, so it's really only 1% a month, right? So if you're doing 10 to 20 a month, that's anywhere from 9 to 19% ROI a month. All right, so that's just one quick strategy. Anyways, let's look at this 10K statement. Let's see. Should be below here. Here it is. All right. Well, let me read this first, and then we'll pull it up and take a look at it. All right. Below, we can see in green the interest or yield that B of A earned from their investment in loans in 2017. All right. Remember that in green. The bottom of the table in red shows the interest expense and the interest rate paid to depositors on their interest-bearing accounts. It may appear counterintuitive that the deposits are in red and loans are in green. However, for a bank, a deposit is a liability on its balance sheet, right? A deposit is a liability on the bank's balance sheet, whereas loans are assets because the bank pays depositors interest, but earns interest income from loans, right? So your checking account, we'll just keep it right there for right now for this example. Your checking account, when you open it up, you are on the liability side of the ledger for the bank. they have to then take that liability and create an asset out of it, right? This is how you create securities. This is how the bank creates securities on all of your accounts that you have, right? You used to could just file and claim those securities. Again, you can't do that nowadays unless you want to sit down in the nice jail cell. You can no longer do the remedies the same way. So this is an alternative strategy, all right? Anyway, I digress. Where was I? In other words, when your local bank gives you a mortgage, you are paying the bank interest and principal for the life of the loan. Your payments are an income stream for the bank, similar to a dividend you might earn for investing in a stock. You'll notice the balance sheet items are average balances for each line item rather than the balance at the end of the period. Average balances provide a better analytical framework to help understand the bank's financial performance. There's also a corresponding interest-related income or expense item and the yield for the time period. All right, so let's take a look at this thing. All right, so here we go. Okay, so remember, this is B of A. This is a 10K statement. It's a portion of it from the year 2017. All right, so we see right here in red, right? In red, 451 billion. You have to remember when you're looking at banks, financial statements, it's pretty much always in the billions, right? You'll see some in the trillions. All right, so total average balance 451B. Interest, income, expense, they only paid out 21 billion of that. So they took in 451 billion of deposits. They only paid out 21 billion. And then they split it up from commercial. This was consumer, this is commercial. So commercial is 467 billion. They only paid out 15 billion. So the total earning assets 1.9 trillion. 1.9 trillion. And their expense only 58 billion. So their total assets 2.2 trillion. They have no skin in the game. No skin in the game. But they've got 2.2 trillion assets under management. Why? Because, you know, most people don't educate themselves about money. Throw our money in the bank. Continue to let them fuck us. Alright, let's go out of here. Let's go back. So there was one other. Where are we at? 12 minutes so far? Okay. I don't want to make this video too long. I've got some noisy people here on the beach behind me. I didn't mean to go that far. Okay. Alright, let's get back to this. There was one other thing on here I wanted to show you. Oh, okay, yeah. The income statement. Alright, so Bank of America's income statement is below from their annual 10K for 2017. Here are the key areas to focus on, right? If this shit right here don't piss you off, I mean, it doesn't piss me off because I know what to do. You know, once you know what to do, once you know how to play the money game, you're good. But it's a matter of educating yourself so you can play the money game. You can play the same game, you know, on a smaller level, on a smaller scale, obviously. But you can play the same freaking game they're playing. All right, total interest earned was 57.5 billion. That's in green for the bank from their loans and all the investments and cash positions, right? 57B. The net interest income that's in blue totals 44.6 billion for 2017. That's the income earned once expenses have been taken out of interest income. Again, net interest income is mostly comprised of the spread between the interest earned from loans and the interest paid out to depositors. Man, they just have a license to steal. I wonder why I love Bitcoin so much. Non-interest income totals 42.6 billion for 2017. This income includes fee income for products and services. It's vital that banks diversify their revenue streams by earning income from non-interest rate related products to shield them from any negative moves in yield. Income under this category includes bank account and service fees, trust income, loans, mortgage fees, brokerage fees, wealth management services, income from trading operations. We can see that B of A's revenue is well balanced, with roughly half of the bank's revenue coming from fees and service income. Yep. So their net income of 18.2 billion is the profit earned by the bank for 2017. All right, so now let's take a look at it. Let me pull this up. All right, and then I'll share with you. I really pretty much already shared with you one of the key strategies, but I'll share it again. All right, so here we go. So now we're looking at it, okay? So in green here, we see the total interest income, 57.5 billion, right? The net interest income, 44.6. The total non-interest income, 42.6. This is a billion. So the total revenue net of interest expense, 87.3 billion, excuse me. Total non-interest expense, 54.7 billion. So their net income, 18.2 billion. I mean, let me ask you this. What if you had access to a business model where, what if you had access to a business model where you didn't have to put any skin in the game? You didn't have to put up any capital, any sweat equity, your children or anything. You didn't have to put any skin in the game. And you had the opportunity to have spreads of let's just call it 10 to 20% per month. 10 to 20% per month. Let me ask you the question again. What if you had the ability to have access to a business model that allowed you to play little banker, right, within your own little tax bracket, right? And you didn't have to put any skin in the game. You don't have to come up with this large amount of capital, I'll say. You do have to put some skin in the game. Because banks, they pay a huge amount of money for bank charters and bank licenses and so forth and so on, right? So they do have some capital outlay to get the framework or the foundation built. But once that's done, it's just all them deposits, baby. Deposits coming in all day long, right? So you have access to that same type of business model, that same type of strategy without a large capital outlay, but you've got access to a spread anywhere from 10 to 20% per month. Okay, so this is the type of education and the type of strategies that our private wealth group offers. Okay, first and foremost, for some of you that are on my other YouTube channel, you know, I mentioned HAR 192. You know what that is. Some of you probably went right over your head. You don't have a clue. You don't know what I'm talking about. And that's okay. Because, like I said, those older remedies, they no longer work. Those older financial remedies, you may even see some things on one of my other channels from older, back in the day, 7 years ago, 6 years ago. Those things, they no longer work, right? So we're in a new financial era, a new financial arena. So you have to do things differently and you have to act accordingly. So with our private wealth group, one of the things that we're able to do for our members is we're able to show them black ink, white paper, show them exactly how to rid themselves of all of their debt without doing anything different than what they're currently doing right now. Number two, show them how to then play this little banker game within your own tax bracket. If you want to move up to a higher tax bracket, you can do that too. But play this little banker game without a huge outlay, but be able to access capital at low rates. Right now, 0% on most of them for 18 months, right? So we're talking low interest rates, right? So we can borrow just like the banks at low interest rates and then have a vehicle where you're able to obtain a decent ROI, 6, 7, 10, 20% per month, right? And if your loan, the cost of the capital, say it's 1% a month, the spread that goes to you, my friend, right? All of that is taught within our private wealth group, all right? If you're interested in that, then you can take a look at millionairemaniacs.club, millionairemaniacs.club, and what you'll want to do is you will want to to the site. You will want to there's about 3 hours of content, and I haven't even talked about Bitcoin yet, right? Because that's a whole nother thing that we educate our members on. Because here's the thing, once you're producing cash flow, you've got your investments and things like that working, you're producing a monthly good sizable cash flow, then naturally you don't want to keep that in fiat, right? You don't want to keep the bulk of that in fiat. You want to put that in a hard asset. The hardest asset over the last decade has been Bitcoin, right? So you want to put that in a hard asset to preserve the purchasing power, and then whatever you need for your day-to-day living expenses or whatever, you keep that in fiat. That's another thing that we teach with inside the Millionaire Maniacs Club. So if you're interested in that, you want to go here to this website. You want to click on Yes, Let Me In right here. When you click that, then it will take you to the video. All right, it's a 2-hour educational webinar that I did some years ago. You want to go through that, and once you go through that, there's an application that you fill out, and then you can schedule a time to chat with myself or one of our other wealth coaches to see if our membership and what we have to offer matches up with your goals and what it is that you want to do financially for yourself. Okay, so I don't want to make this video any longer than what it already is. I will be dropping another video tomorrow talking about some more education centered around banking, so look out for that. If you're not subscribed to the YouTube channel, make sure that you subscribe. If you want to follow me on Instagram, you can. It's Real Cashflow Queen, Real Cashflow Queen. But the best way to get the deep, detailed information is to subscribe to the YouTube channels, because these particular videos are a lot longer, a lot more in-depth. If you want to see the shenanigans and me acting a damn fool, then probably Instagram is where you can get that type of entertainment. All right, so anyways, have a great weekend, and I will see you in the next video. Take care.